Hey everybody, Nick Espinosa, your chief security fanatic here, and today we are actually talking about cryptocurrency, and I'm asking the question, will cryptocurrency actually survive long term? And I think this is an important question, but I can already hear and see the hate messages I'm going to get from people who didn't actually bother to watch this video or listen to the podcast and only saw the title. But here's what's going on. And it starts with news today, but we're going to go much deeper than that. Now, here's what happened. Bitcoin dropped to a 3-month low late today amid jitters over U.S. monetary policy tightening, as well as an internet shutdown in Kazakhstan, the world's second biggest Bitcoin mining hub. If you didn't know, Kazakhstan right now is going through a lot of political unrest in their largest city, Almaty, and that obviously is a huge, huge problem, and we all hope those people will be safe. Unfortunately, the Kazakhstani government appears to be basically calling on Russia to essentially quell this and help them prop their government up. Never a good sign when authoritarians help other authoritarians, but I digress. Now, the price of Bitcoin fell just below $41,000 to $40,749 just after 10 a.m. Eastern Time today, and it reached its lowest level since September 29th, according to data from Coinmetrics. It was last trading down 2.9% at a price of $41,974.75. Obviously, still way ahead of like the 3 cents it cost when it started, but you get where I'm going with this. Now, the world's largest cryptocurrency began falling earlier this week, minutes basically from the Federal Reserve's December meeting that hinted that the U.S. Central Bank would actually dial back its pandemic-era stimulus. The hawkish comments triggered a sell-off in global stock markets, which spilled over into cryptocurrency. Now, Bitcoin bulls often describe it as an asset that is uncorrelated to traditional financial markets. However, experts have noticed growing parallels in the price movements of Bitcoin and stocks, and that, I think, personally, is because a lot of investors that were not early investors into cryptocurrency are now dipping their toes in. They're now actually using some of their portfolio to invest in cryptocurrency, and so we're seeing it actually get some kind of legitimacy, but we'll talk about that in a moment. Now, other digital currencies continue to drop as well. Ethereum dropped 6.8%, Solana dropped 7.7%, and that is the current news. So basically, one of the traits that we've seen with cryptocurrency, Bitcoin as a great example of that, is that it's volatile by default, which obviously keeps many investors away. We saw it jump to, 20,000 in like 2017. People were mortgaging their houses, then it dropped like a rock, then it went back up, then it went down. It's not stable like a regular currency. But I digress because I want to read you the words of Hamilton Nolan. He's a writer and author from his January 4th article entitled "The Ticking Bomb of Crypto Fascism. The Crypto Market's Inevitable Crash Will Pull America's Politics in an Even Scarier Direction." And I quote him directly on this. And I am not getting into the political side of this. You want to go read his article to talk about the American politics and where this is going to go. You know, I think that's totally fine. You should go read it. I read it. Everybody should read it. It's an interesting read. But this is what the discussion should center about, is his actual analysis of what cryptocurrency is. And I think he does a really good job of generating what should be a really good discussion if you are actually watching or listening to this and not actually just seeing the title and thinking I'm a complete and utter moron. Here's what's going on. And I quote him directly. This is author Hamilton Nolan, and I quote, "The economy briefly shut down," and for the record, he's starting at the beginning of the pandemic in 2020. I forgot to preface that. This is where I pick up because I'm skipping the politics stuff. And I quote, "The economy briefly shut down, and there was a pandemic, and then there was a ton of government stimulus money, which has successfully staved off another Great Depression. That is good. An effect of that, however, is that there are simply a lot more money in America than there was before. That money flowed into every sort of asset, stocks, real estates, you name it. Its enormity is fueling weird bubbles, the kind of bubbles that happen when people are searching desperately for salvation. Booming quote-unquote meme stocks like GameStop soared then fell, their up and down stock charts standing as stark illustrations of the fact that it is impossible for pump and dump schemes to replace a functional social safety net. Even more significant is the rise of cryptocurrency. Crypto is now worth trillions of dollars. All of that value is premised not on some fundamental utility, but rather on the idea that there will always be someone else who will come along and pay you more than what you spent on your crypto. This is going to end badly." Now, I think that is honestly worth a serious discussion, and we'll get to that because I digress. Here is more of Mr. Nolan And again, I'm quoting him a lot, and these are long quotes, but this is so, I think, important to have a cryptocurrency discussion because, again, it is really booming right now despite its volatility. I quote again, they are called cryptocurrencies, but clearly they are not currencies. Their value fluctuates far too much to be a useful medium for exchange. So, what are they? They are collectibles, pure speculative objects with zero intrinsic value. If you buy a stock, you own a portion of a business. If you buy a house, even if the price goes down, you still have a house. If you buy a Bitcoin, you have nothing but the title to a piece of computer code that can do absolutely nothing for you to the extent that someone else can be induced to pay you money for it. In the midst of a mania, as we are now in, the prices of these imaginary assets tend to rise because the collective public sentiment is that prices will rise. When that sentiment changes, whether due to fear or some event that causes crypto holders to need to cash out, the price will plummet. This basic dynamic has been demonstrated a zillion times in financial history, often by assets with far more substance than crypto. Now, I've actually made an interesting and similar argument to what he is making here, in the sense that when crypto was in its infancy and it was starting to rise and starting to expand, basically a lot of criminal elements, in this case drug lords, like billionaire drug lords, found that cryptocurrency, because it was much harder to trace than traditional bank accounts, dollars, all that kind of stuff, were turning to cryptocurrency. And I speculated that if drug lords found a much better way to move money that wasn't cryptocurrency, they would completely pull out and that would bottom out the market. But essentially, because cryptocurrency has gone just beyond, let's say, the criminals of the world with a lot of money to all kinds of investors to trillions of dollars, if we have some kind of rush and a cash out, it's going to drop like a rock. Like dropping a few $1,000s, per coin is nothing if it drops $40,000. That's a huge thing. And here's the very last quote I'm going to use from Mr. Nolan, and I quote once again. The crash of crypto is bound to happen for the same reason that all Ponzi schemes eventually crumble. There is not an infinite supply of new people willing to pay ever-increasing prices for the stuff that you currently own. The more interesting question is not whether many small-time investors will lose a lot of money on their crypto investments, but what will happen when they do. And he goes on to talk about the politics of that, the radicalization of those investors, all that kind of stuff. Again, I'm not getting into the analysis of that, but that is, I think, a very interesting discussion that needs to be had. We have a lot of people, and I get a lot of comments of like, oh, well, can you help me with cryptocurrency? What is cryptocurrency, Nick? Blah, blah, blah. What is the cybersecurity? Is it really as bulletproof and perfect as they say? I get a lot of these kinds of questions. People are interested in dipping their toes into cryptocurrency, and I'm talking about traditional investors. But that is a point, and I'm trying to think of actual investments. You can invest in a piece of art, and you have something tangible, not computer code. You can invest in a house, as he said, even if the value goes up or down, you still own the actual object, not essentially a piece of computer code, in his words. And I think that is something that's very interesting. I am not an economist by any stretch, but if there is an economist or an economics major even that is watching this, I would love to hear from you and all of this, and I will try to find your comment through all of the hate comments that basically tell me to go straight to hell. But I think the question of will cryptocurrency survive in the long term, I believe the answer is yes. And the reason why I believe the answer is yes is simply this. I don't think it's going to stay at its current rate. I don't think it's going to be nearly this inflated. To his point, I think it's going to stable off. But what I'm looking at is essentially an advancement in how we actually distribute currency and use currency in a society. And so when you have an unregulated currency that's purely speculative, you see the volatility that has. That's what Mr. Nolan speaks to. That's what I mentioned as well outside of him. And so you're going to see these massive ups and downs that stable currencies don't have. But when governments start backing this and saying, here's the US dollar in cryptocurrency form, now you have something backed by banks, you have something backed by the faith of a government. China's working on this, other countries are working on this as well. I think that is the next evolution of cryptocurrency. And will unregulated speculative cryptocurrencies essentially exist? The answer is yes. They absolutely will. They will still be there. But as a lot of those traditional investors are looking at cryptocurrency as it is right now with that volatility, banking on it ever going up and up and up, maybe not realizing at some point exactly what I just quoted, again from Hamilton Nolan, which was a fantastic article, I think people are going to lose their shirts. The savvy ones are not going to do anything. Warren Buffett himself who doesn't invest anything in anything he doesn't understand, has basically said, I don't really know what cryptocurrency does. I don't know what it gives you. And I think this is his point. I think essentially Mr. Nolan explained that in the sense that, yeah, you're not getting anything tangible. When Warren Buffett goes ahead and buys an insurance company, he owns a business. When he goes ahead and buys 8 billion acres out in Montana or wherever, he owns land. That's the difference. And I think that as we are moving forward, there has to be a balance and a recognition that the worth of, let's say, a piece of computer code, as Mr. Nolan puts it, there has to be a value and there has to be a backing to make sure that that continues to stay tangible. And so that's something that I think is very interesting. I think it's a very interesting conversation. If you watched or listened to this all the way to the end, now you're clued in. I would love to hear from you on this because I know so many people have so many thoughts, but all of the crypto bros are basically just going to give me endless crap for this video without actually watching it. I'm waiting for that, but we should honestly have a discussion and ignore those people. And please like, share, follow me here on Facebook and Twitter at NickAESP. And please feel free to subscribe to me at YouTube as well. And as always, stay safe, stay online, and please stay private. Thanks, everyone.